Hi everyone, good morning. Thank you for joining us today. My name is Muktar Oladunmade. I'm a reporter at TechCabal, and for today we'll be discussing the rise of OTC and stablecoins, how Africa's quiet FX resolution, with insights from Quidax recently launched report. The report was launched just before this panel session started. The report is about stablecoins and OTC settlements in Africa. So the report is in collaboration with TC Insights. TC Insights is the data and research arm of TechCabal, and it examines the rapid rise of stablecoins, OTC, which is over-the-counter crypto trading across Africa, and it uncovers how businesses are leveraging OTC, that's crypto trading, over-the-counter crypto trading, and stablecoins to navigate FX volatility. So FX volatility means, for example, if you're based in Nigeria, you know that the price of dollars in naira is kind of always fluctuating. That happened, but it's been stable of recent, but it has always been fluctuating, and that's something that we're used to here in Africa. They're also using the stable coins and crypto trading to solve compliance gaps and cross-border trade constraints. So TechAbal speaks to the business and human impacts of tech and innovation in Africa through high-quality articles, reports, and events like this. We also publish the TC Daily newsletter, a comprehensive roundup of news, tech news, events across Africa. If you're not subscribed to TC Daily, then you're totally wrong and you're missing out on daily news on everything tech in Africa. This event is organized by TC Insights and Quidax. Like I mentioned earlier, TC Insights is the event, research, and data arm of TechAbal. They're an African-focused digital economic consultancy that leverages big data to help startups, investors, operators, big tech companies, governments, and other ecosystems players to questions and implement key interventions in Africa. And if you're not familiar with Quidax is the leading African cryptocurrency exchange that is known for its innovative OTC trading solutions and stablecoin infrastructure. In recent years, Quidax has focused on enabling API-driven OTC stablecoin infrastructure to support global and local businesses with cross-border transactions in markets like Nigeria, Ghana, Kenya, and other African markets. So to introduce the guest and agenda for today, we have Obinna Iwuno. I hope I get that right. Obinna Iwuno is the president of the Stakeholders in Blockchain Technology Association of Nigeria, SIBAN. We have Faith Titus here. Faith is the co-founder of the Blockchain Nigeria user group. We have Chime Ihebenachi. He is the chief information security officer and head of B2B and API business at Quidax. And we have Ezichim Onweagba. He's the head of global partnerships at Quidax. So for now, I'm going to hand off to my colleague, Adidayo Ojo, the handsome man that you have seen on the screen. He is an associate consultant at TC Insights, and he's going to walk us through the report for 10 minutes. Um, Over to you, my handsome colleague, Adidayo.
Thanks, Mukta. Thanks for the kind words. Once again, good morning, everyone, and thanks for joining our event today. This industry report covers the rise of over-the-counter trading and stablecoins in Africa. I'm looking at Africa's quiet FX revolution. To start with, it's important to mention that this industry report is very important to the ecosystem in the sense that we've tried to spotlight some of the growing role of stable coins in cross-border payments and other sectors. We're also looking at the regulatory environment around OTC and generally cryptocurrency around Africa. Also, we've also spotlighted some of the real-world use cases that we are seeing in terms of global businesses adopting over-the-counter cryptocurrency trading for their own business needs. Quickly, we'll look at the demographic and market context of Africa, looking at the key statistics. Currently, Africa has a young mobile-first population with about over 1.5 billion people and a median age of 19.2 years, which shows a very young population. We have a smartphone penetration rate of 51%, which also shows that this is a digital savvy population. Mobile internet usage is at 27%. We also have very high mobile money penetration at over 237 million people, inflation at 18.6%, and very importantly, the crypto market cap is at 3.36 trillion as of 2024. We also have Bitcoin market cap at about $1.96 trillion, with 57.5% dominance of the market. Stablecoin market cap at $234 billion, also having a significant market dominance in terms of share of the market. It's also important that Africa still has about 60% unbanked population, which also shows that there is need for us to have alternative financial rails, and there is actually vast demand for alternative financial rails across Africa. Also important to mention is the fact that we're also seeing a shift from crypto usage is shifting from the season of trial, retail speculations, and we've moved to practical engagements, practical payments, seeing global businesses engage with over-the-counter trading for their market entry into Africa for cross-border payments, also for inflation proofing among African businesses. A quick look at blockchain application across sectors in Africa, just a sidetrack here. We can see that the likes of Nigeria, South Africa, Kenya are the active markets for blockchain technology implementation across Africa. It's also worthy to mention that the financial sector across the countries in Africa has the highest count of blockchain innovation compared to other sectors. In terms of the status of cryptocurrency in African countries, we have about 14 African countries who have some level of restrictions, not a complete ban or an explicit ban, but there are some activities in crypto trading in those countries. We have the likes of Nigeria, who has launched their CBDC. Other African countries like Ghana, South Africa, Kenya are in their piloting phase, which shows that the level of adoption and the regulatory friendliness is also easing across the countries. Next slide. Looking at the adoption of over-the-counter cryptocurrency trading among global businesses. Globally, we saw a rise by 106% at the end of 2024, which was largely driven by institutional and macro developments. Breaking this down, we also saw the introduction of exchange-traded funds, which offered institutional investors regulated market access to trading with cryptocurrency. Also, we've seen that the pro-crypto stance by the Trump administration in the US has significantly fueled crypto spot trading between 2024 and of the present day. In terms of stablecoins, we saw a 147% year-on-year growth in stablecoin adoption and market engagement globally. BTC share in total was at 22%. And some of the key drivers of OTC adoption are the fact that businesses globally can trade in high volumes and have confidential settlements outside of the centralized exchanges without disrupting the market. They have immediate access to fiat for their local partners. And then we have institutional partners like Quidax, who are very regulatory compliant and are also working in tandem with local regulators across over 15 African markets to ensure that they offer this seamless service to global businesses. We've also seen a lot of use cases around logistics and supply chain in terms of e-commerce as well for cross-border payments. We're also seeing a situation where tech bros, freelancers are using cryptocurrencies as a form of payment. We see also ERP platforms using stablecoins as a form of payment for payroll for staff. So some of these are the factors that are driving global adoption of cryptocurrencies and even within Africa. Notably, in 2024, crypto market experienced significant growth. We saw a significant increase in demand for stable coins and also a notable rise in crypto to crypto transactions across the globe and in Africa. A leaner focus on Africa now. In terms of the rise of stablecoins in Africa, we see stablecoins as the preferred settlement asset for global businesses that are operating in Africa or looking at entering into the African market. As of 2024, stablecoins accounted for 43% of regional transactions in sub-Saharan Africa. We also noted that stablecoin has overtaken Bitcoin in terms of volume for cross-border African transactions. In previous years, we had a situation where a lot of the transactions were settled using Bitcoin, but we've seen a shift to stable coins. We also see a situation where USDT and USDC are very dominant in the market, with over 97% of global stablecoin markets capped is fiat backed. 97% of the global stablecoin market is fiat backed. We're also seeing businesses and individuals hedge local currency volatility using stablecoins as an equivalent to ensure that they don't experience liquidity. Looking at the regulatory ecosystem, the regulatory environment across Africa, we have Nigeria, South Africa, and Ghana, and likes of Kenya shifting from restriction now to engagement. These countries have evolved from bans to now having sandboxes, piloting CBDCs, and we have Nigeria being the only country who has actually launched its own CBDC. Looking at some of the case studies that we've noted as of 2024, we have global businesses like Never Commerce, which has been able to reduce payment settlement time across Africa and Europe from days to settling transaction within less than an hour, also being able to save about 2% less on each transaction using stable coins, which has also positively impacted faster corporate cash cycles and also led to improved business confidence for global businesses operating in Africa. So looking at some of the key challenges, what's holding the market back currently, we are still experiencing some regulatory fragmentation. There's still evolving rules and compliance happening across Africa. We have the need for us to also have our currency-pegged stablecoins like the CNGN, the CBDC launched by Nigeria. We also are still experiencing FX volatility pressure across the continent. There's still the concerns around the risk of illicit flows and the need for more robust KYC and AML standards to ensure that this is a very viable path for global businesses to transact in Africa. There's also a need for increased sensitization for SMEs and other corporates operating in Africa as well. Looking into the future, what's next for cryptocurrency and digital finance in Africa? We envisage a situation where over-the-counter trading is going to be a very key infrastructure that will become invisible at the back end for African fintech and different other sectors, including ARP platforms. We are also going to see institutional adoptions by local banks, exporters, importers, digital platforms, betting companies, and so on. We also anticipate that the arrival of the open banking framework and the harmonized continental regulation like the AFC, FTA is going to influence increased adoption of stablecoin for businesses, and also the CBDCs are likely going to blur the lines between crypto and fiat. Lastly, the key takeaways from our reports. Our insights show that Africa is now a key hub for crypto-driven payment innovation, with stablecoins being at the center of this drive. Regulatory clarity and institutional infrastructure will also define the next wave of growth in adoption of stablecoins across Africa. And to close, global businesses operating in Africa, this is the time to embrace OTC rules and partner with regulated players like Quidax to prepare for a digital future that ensures that you have access to FX at a reliable rate and ensures Pan-African settlement within a very short period of time. Thank you very much.
Thank you very much for that interesting presentation, Adedayo. So I'm going to jump right into the questions for the speakers, and I would like to take it. I would like for them to answer in the order that's in my screen. That's Obinna, Ezichim, Faith, and Chime. So in that order. Thank you. So my first question is, what factors do you think have contributed the most to the rise of OTC and stablecoin usage in Africa's business ecosystem over the last 2 years? That's what do you think is making the rise in OTC and stablecoin use in African businesses over the last 2 years? Before we start, I would like to remind the audience that there is a moderator. Sorry. There's a moderator in the chat. Her name is Eniola. She'll be moderating the chat, so be mindful of not dropping any type of weird or insulting or any type of wrong thing in the chat box. Thank you very much. So, I'd love to hear you answer the question, Obina. What do you think is making African businesses use stable coins and OTC trading?
Okay, thank you very much. You are asking what factors have contributed to the rise of stablecoin usage in African business ecosystem in the past 2 years. I would say, first of all, the factor that has contributed to that is the increased awareness of stable digital assets. There is an increased interest globally for digital assets, and you will see a rise in different sectors, industries, countries, and communities about digital assets. So this has exposed a lot more persons and increased the adoption. And in the same vein, as the exposure was happening, businesses were also discovering that, they could use digital assets for payments, and that there are alternatives of payment rails and settlement instruments via digital assets, and that has given an increase to the use of digital assets by using stable coins by businesses. Another thing also is the liquidity that it provides. Businesses need settlements and payments that can be done faster and cheaper, and stablecoin seems to provide this. And with very little availability of FX in the traditional market and sector in different African countries, stablecoins became the viable option because it has deep liquidity and it's able to satisfy the market needs. And what other option if it can do the same thing that they want to do with the other type of payment system? So I think these are the two major factors that have given increase to the usage of stable coins by businesses. There are so many other factors, but I think that these two ranks the highest.
Thank you very much for that, Obina. That's something that you agree with, Ezichim.
Yeah, absolutely, Muktar. I agree with Obina, right? Especially on globalization. So there's something I like to call need for speed. I think there's been an increased need for speed in Africa and globally, right? So, for example, um, you order something on Amazon Prime and it gets to you the next day, right? So we find an increased demand for goods and services, not just goods and services, but goods and services delivered fast, right? And then the next thing that happens is people want to make payments, businesses want to receive payments fast. So that's something that traditional banking rules hasn't been able to hack yet. But with stable coins, you can do all of that. So stable coins is moving at the speed of innovation, right? As a matter of fact, I think that the same way fintech, the same way financial services, the speed of financial services is increasing, that's innovation also transferred to logistics, right? I think there will be a world where you order a car from the US, it gets to you same day, right? We're already started to see it with Amazon, we're already started to see it with Elon Musk businesses, right? So just that speed in logistics, speed, the need for speed, I think is what is driving the demand for stablecoins.
Okay, thank you very much, Ezichim. What about you, Faith? What do you think is making African businesses use stablecoins and OTC more nowadays?
Well, thank you very much. Good morning to everyone. So just to add to a bit to my fellow panelists, I think you know that for me, when I look at the availability or the data that are available, from 2014, even from the ones that you stated from the report, there are essentially three fundamental shifts that have actually created this perfect shift, for OTC and stablecoins adoption, right? And so looking at the report again, we have witnessed some remarkable changes. For me, the first factor could be the key, from my own understanding, is actually regulatory clarity. However, it is not just about having regulations, but it's about having the right kind of regulations. And for bringing it down home, we've seen that Nigerians Security Exchange Commission licensing regime in 2024 wasn't really just a policy change, right? So essentially, it was a confidence signal that rippled across the continent. And so when the likes of Quidax, for example, became the first exchange to secure operational approvals, so it essentially told the global businesses around even Africa that, Africa is ready for institutional grade crypto settlement. So more so, we saw similar movements even in South Africa, where we saw about 59 financial sector conduct authority, being granted licenses, all through from 2023. And therefore, this actually has created what I would call a domino effect across the region. And secondly, from statistics available, is the infrastructure maturity for me. So looking at the report again, we see that OTC volume globally actually surged, like it did, stated, it surged up to about 106%. Yeah. But in Africa, we are seeing something more profound. So we have witnessed businesses moving from speculation, not just speculation, but to utility, right? And for context, Nigeria really, as we have seen, have processed approximately 59 billion in crypto value, since last year. So this has actually ranked us as being on the second position globally, taking after India. And that is not just a retail trading. Essentially, that's a business infrastructure. So, but here is the third factor that really drives it, in my own opinion, the pain points. So the pain point here is that there have been conversions with businesses across continents. And so when let's say, just like, I don't know, Ezichim did mention about, cross-border payment. Say you have someone in Ghana or in Nigeria as an exporter, and this person needs to pay a Chinese supplier. You know that traditional banking really can take 2 to 5 days, to settle transactions across board. And again, the cost effect is actually very high. It takes about 2 to 8% in fees. So in this case, you can see that with OTC, stable coins transactions, like in the case of the CNGN, settlements, here we are talking about settling business transactions in minutes and cost under 1%. So you can see, when you do the maths, you can see that this is not just compelling, but it's really transformative, and therefore businesses are really making this switch. So these are actually the factors that really have caused the rise in OTC adoption in Africa, in my own view.
Thank you, Faith. How about you, Chime? What do you think?
Okay, not much to add after so many great speakers have really gone in depth in a number of things. But I'll just add a bit, uh, which might just elaborate more on some things that have already been mentioned. Good morning to everyone, or good afternoon, good evening, depending on which country you're at. I think the ease of access is the only one thing I want to mention. And interestingly, the report sort of mentioned that about 60% of the population in Africa is unbanked. And that's where stable coins come to the fore, making it easy for, and we also saw from a report that there has been increase in internet penetration. So you have people that have more access to internet, but they have no access to banking services. You go into the rural suburbs in Africa, they need to journey to access banking services, and then but they have mobile phones, they have internet access phones, and this is where stable coins makes it easy for them. And we've seen that post COVID, a lot of businesses have gradually moved online. And then the question is, where is giving more visibility to Africa? How can those inflows come into Africa? Stable coins made it easy to fill in that gap. And so one of the usage is in cross-border payments, as mentioned by Ezichim and Faith. And you can see stable coins makes it easy. So the ease and then the speed. Such a great win-win for Africa because it brings foreign direct investment, and Africans gives them access to financial services. That's what stablecoin has done. And where you see demand meeting regulation, that's why 104% increase in the last 1 year. So yeah, that's small bit on why stablecoins and OTC have grown.
Okay, thank you very much, Chime. So I'll move on to my next question, and I'll start with you this time around. We'll go in reverse order. Do you think stable coins are now seen as a viable alternative to traditional FX system? That's like instead of normal FX dollars, you think that stablecoins is now seen as, oh, okay, this is like a very viable alternative to this. And I'm not just talking about like maybe small within like the tech ecosystem or like within like small ecosystems, like generally across like African businesses. From where you operate as, do you think that stable coins and crypto trading, using crypto to make payments is not something that everyone is open to? So
Um,
before you answer, we're going the other way. That's Chime, Faith, Obinna, then Ezichim. Um,
All right. Yes. My simple and short answer will be yes, and I'll just give some rationale why, as an alternative to your traditional FX, stable coins has or fits into that utility, um, especially for African businesses. So we can see that first is it simplifies the simplification. Stablecoins makes it simple and easier to access foreign exchange. Just bring it into an African context, an African in Lagos, Nigeria, or in Accra, how can they access foreign exchange? There is first they need to get to the bank. They need to meet a certain number of they need to have certain amount of assets. Need to meet certain requirements. But just by verifying your identity as a business and as an individual, there is that ease to access. You can access foreign exchange in the form of stable coins. And stable coins typically are denominated or fiat denominated cryptocurrency value. So they are pegged one to whatever currency it is. We have the case of the CNGN, you have the case of the various dollar pegs, and then a lot number of other currencies, the British pound, the euro that have pegs. So you now see that with ease of just being able to identify yourself without the unnecessary requirements from maybe large number of assets, collateral that may be required for you to access foreign exchange. One, that ease, which is what I mentioned in first, is already gives you as an African business, a small retail business, access to foreign exchange. The next thing is speed. instead of waiting for payments that take days using the traditional FX system, you see instant payments at fraction of the cost. And so you gradually now see that this is looking not just as an alternative, but also a viable one. The next point will be in terms of liquidity. And liquidity is just the amount of how liquid or what quantity of that currency or foreign exchange can you access. And that's where the Quidax OTC DEX comes in. You see businesses doing high volume transactions, one, fast, as mentioned, secure, because a number of proper due diligence, non-disclosures are being signed, proper processes have been put in place, following a regulatory framework that ensures that you access deep liquidity with lesser volatility at low cost. So with these, we clearly see that there is already a clear alternative to traditional foreign exchange using stablecoins.
Okay, thank you very much, Shime. How about you, Faith? Are you in agreement?
Well, so let me be very clear on this, all right? From my understanding, stable coins aren't replacing traditional FS system, right? Essentially, for me, I see them as, creating a complementary rail that really solves specific inefficiencies in our traditional financial institutions. And that's an important distinction to me, right? So looking at the data again, because I like looking at data and all of that, we really can see that stablecoins now account for about 43% of all crypto transactions. And that's not speculation, like I did mention earlier, it's essentially utility. And however, when we look at specific examples, like when we have this Ethiopia bear, where they lost about 30% of their value in July 2024, then we witnessed about 180% year-over-year in retail stablecoins transfer. But here is the key point. Businesses weren't really abandoning their local currencies. That we have seen. So essentially, they were actually hedging operational risk. So think of it this way. And I think this is crucial if you are running a Pan-African logistics company. So you see that stablecoins really gives everyone, 24/7 access to liquidity, and not just liquidity, but access to transparent audit trace and settlement finality in minutes rather than days. So, however, we have seen that traditional, financial systems actually remains essential for local operations, but stable coins excel at cross-border velocity and transparency, and therefore we are seeing a hybrid approach emerging. So, and we can say that the real drivers from statistics here is actually cost efficiency. So, and the available data have actually shown that sending, let's say, for example, you want to send $200 across sub-Saharan Africa, that will cost you about 60% less using stablecoins compared to the traditional method of sending transactions. And for context, for businesses, operating in a very thin margin, that difference is very, and I mean, an important difference between growth and stagnation. And so we are witnessing mass adoption driven by economic necessity. So as we say in Nigeria, I think this actually captures, it perfectly. Every stream contributes to the river. So stable coins are becoming that additional stream in our financial ecosystem, and therefore they are just a complement, rather than, I would say, a complement of financial instruments, rather than to compete with the existing financial system. So what I'm saying is they are not just alternative that are completely, replacing our own traditional fiat, but then they stand as a bridge or a complementary financial instrument to, make everyone have access to financial inclusion in a seamless way. So this is my view.
Okay. So stablecoins have become an alternative for FX. And there are various reasons responsible for this, especially for businesses. We know that the primary goal of every business is to make profits while minimizing costs. And that is the viable option that stablecoin offers. One, speed. The speed at which stablecoins can be used for settlement is faster than that of the bank. You can have instant settlements and payments with stablecoins, right? The cost of transaction is far, far lower than the traditional sector. And then you talk about access, all right? And the availability is easily accessible. I mean, once you are connected to the internet and you have the device, you can access it. And Africa has a very high mobile penetration, right? And then we also get to look at trust in the blockchain system over the financial infrastructure in terms of security, right? These are factors that have made it a viable alternative for global settlements. And then we look at also the growing of OTC infrastructures. Before now, we do not have a lot of on-ramp and off-ramp settlement systems and OTC desks. Now we have them in abundance, or at least at a growing measure. And all of these things combined together have made stablecoins an alternative for FX settlements than the traditional system.
Thank you, Obinna. Ezichim, are you on Chime or Faith or Obinna's side? Who are you?
So a mix of both, actually, Muktar. A mix of both, because yes, stablecoins are a viable alternative to traditional FX rules. However, we need to pay homage to traditional fiat rules, and that's because stablecoins is evolves from fiat, right? Even USDT that we talk about, it is a digital representation of USD, right? So where USDT evolved from USD, right? So I think that stablecoins are an advancement of today's traditional FX rules, and particularly useful for African businesses because of the features that we enjoy, the benefits, so speed, ease of access.
I can't really hear Ezichim. I want to know if it's just my network.
Yeah, I think he went off.
Okay. Just checking in that it wasn't my network. So while we wait for him to come back, I think I have one more question for everyone before I start asking individual questions. So I'm curious as to how you can break OTC trading down for a newbie. What distinguishes OTC from centralized exchanges, and how do you think, first of all, what distinguishes OTC from centralized exchanges?
So OTC trades, OTC means over the counter, and OTC exchanges are largely for businesses, large orders, which if you do through a traditional exchange or a centralized exchange can cause a frenzy in the markets, right? And this is the reason why OTC exists, because it is established for large settlements. Before now, it used to be for whales, when whales want to move large, they want to exchange large amounts of digital assets. They use over-the-counter services to keep the market stable. All right. And in fact, stability of the market is the major reason why businesses are beginning to use stable coins, for settlements. So OTC are majorly for large exchanges, trades, payments, remittances that can cause a shock or a wave in the market if you use a centralized exchange. So, but centralized exchanges are majorly for retailers and medium scale traders. All right, that is trading on regulated platforms that can offer you exchange from one digital asset to the other, or from digital assets to fiat, like your stable coin to fiat and fiat to stable coin, as the case may be. Like Ezichim said, stable coins are a derivative of fiat. So it's not a total instrument different on its own. It's just a digital representation of fiat. So I think this is the simplest explanation of the difference between OTC and centralized exchanges. They do the same thing, but OTC is for large volume traders to mitigate against the impacts in the markets.
Okay, thank you very much for that, Obinna. So, my next question is directly for you, Obinna. We've seen regulators in Nigeria, South Africa, and Ghana make major shifts in crypto policy recently. What do you think is driving these pivots from restriction to engagement? Oh, sorry, Ezekiel's hand is up. Sorry. Before you answer, Obinna.
Yeah, Muktar, sorry, my network got cut out towards the end.
Yes.
So, but just to add to what Obinna said, the key differences between, and I hate to take us back, but the key differences between OTC desk and irregular centralized exchange. And I'll paint a picture, right, to build on top of what he said. So imagine you had to buy $1 million worth of cash, right? And then you take your Naira to Echo Hotel to buy. What would happen is you would see maybe 30 northern bureau de change guys who would sell maybe $1,000, $200, and then you'd have to aggregate. But while you're doing that, the word is spreading on Echo Hotel, that Muktar is buying. So everyone starts to increase their rates, right? So by the time you finish buying your $1 million, you buy at a very high rate, and then it will take you the whole day to execute, right? Now, that is what a centralized exchange looks like. This is what an OTC desk looks like. You have one person who would sell all of that 1 million to you in one transaction at one rate, right? So with that, you've saved your time, you're stressed, and then you've also been able to buy all of that volume in one transaction, right? So fundamentally, that's the key difference between an OTC desk and trading on an exchange.
Yeah, so outside what they have said, I just wanted to, let us know that OTC right now is actually getting interesting. Like you see, most of the decks are actually evolving, right? So if you're here and you're thinking that OTC is not just something that's and when I go there because it has a lot of risk, and let's say, for example, because most people do confuse the OTC DEX to the P2P of transactions where, they can find someone that can help them, execute some kind of voluminous transactions. But I just want to say now that because of the advancements in technology, the infrastructures are actually evolving. So here now we see that they are not just facilitating trades, but essentially they are actually offering some form of API integrations, where transactions are being automated. And you see, faster settlements in workflows, and even credit being facilitated for working capitals. And so we are seeing a complete transformation of the service model. So we are also seeing OTC DEX being compliant, getting licenses. Of course, Quidax here can serve as one of our examples. So, and you can see that it's actually making movement of money very seamlessly across borders for business people. So I just wanted to, chip in that.
Okay, thank you very much, Faith. I think that has been super useful. So, like, Obinna, my direct question to you again is: we've seen regulators in Nigeria, South Africa, and Ghana make major shifts in crypto policy recently. What do you think is driving this shift from restriction to engagement from regulators?
Okay. Some of the things that has contributed to this is first we look at increased global adoption. Now, there has been a lot of ban here and there in the early years, but majority of these bans has been ineffective. And the more the ban happens, the more the interest and increase in the usage and adoption of cryptocurrencies and digital assets across the world happens. And so it has made the regulators and government to realize that, oh, these shadow bans are ineffective, that it is high time that they shift towards a regulatory approach than shadow banning that are ineffective. Another area also is increased global trends. You look at what has happened in the EU, MICA, you look at Dubai, Bara, you look at Singapore, and most recently the Genius Act that has been signed by the President of the United States. And Nigeria also had taken a leap forward by, coming up with a regulatory incubation program, to put digital asset operation in a sandbox, to provide provisional licenses for operators to carry out businesses and see how we can harness this ecosystem properly. Another thing also is that government is beginning to realize that crypto and digital assets are a revenue stream. So they could raise tax from it, generate revenue from it, attract AI from it, economic development, and all of that could come out of this. So these are also shaping the regulatory shift. And then, of course, bodies like SIBAN, constant engagement with regulators and governments and different agencies, stakeholders, and collaborators have also increased the awareness, because when we do these engagements, we are advocating for the industry, we are advocating for the country and what we could benefit by formally regulating and recognizing this thing. And over the years, it has been largely successful and effective. It took quite a number of years to achieve, but we are beginning to see the fruits of that already. One of them is the recent ISA, Investment and Security Act, that has recognized the digital assets, and put its regulatory oversight directly under the SEC. So we are going to see more and more of this happen. Also, the work of stakeholders and operators like Quidax, like the session that we are having now, is highly insightful, educative, and interactive. We spread more awareness, we give more education, we give more insights, and our regulators and government also gets a wider scope of what this is, what has been happening around the world, and how Nigeria can position itself, strategically to continue being a leader in Africa. So these are some of the things that has contributed to that.
Okay, thank you very much for that, Obinna. So my next question is to Ezichim. Looking beyond Nigeria and Ghana, which African markets or corridors do you think are primed right now for OTC and stablecoin uptake? And what do you think will shape successful adoption in those countries? Did you get that, Ezichim?
Yes, I did. So beyond Nigeria, Ghana, we have our eyes on the Zavzov region, right? The Francophone West Africa, so Senegal, Cameroon, Ivory Coast, Congo. I think those markets are ripe for crypto stablecoin adoption because they share the same characteristics with the Nigerian market, right? So um, a lot of young people, one, the population is huge. I think DRC is the third most populous country in Africa, and large trade volumes, right? So any country that has those three features is almost always fast to adopt cryptocurrency, right? We always start to see some volumes, some trades in those countries, but we think that more can happen, especially on the regulatory point side of things, right? Right now, things are still looking slow in that region, but we believe um, with the ISA Act in Nigeria and the DX license in Nigeria, and now the VASP license and regulation in Ghana, we think that Francophone West Africa is going to take a cue from that, right? So yeah, those that's the country that's the region that we have in focus currently.
Okay, thank you. Um, does anyone else on the panel think there's any other country or region that is really primed now for OTC and stablecoin usage in Africa?
All right, I just wanted to tie what Ezichim said and tie it exactly into what Obinna mentioned. So Ezichim was speaking on other regions that we're seeing that OTC and stablecoin settlements could be used. And then Obinna spoke around why there is this increase in policy. And I think in Africa, the reason why we're seeing this increase in policies across the region is that, and this is going to, my answer is not just only the regions that Ezichim has mentioned, which are like the prime top regions, but I think it's an all of Africa play, because prior to now, all of Africa has been dependent on foreign currencies for global trade. But creating policies around stablecoins allows a Ghanaian or a Nigerian, not resident in Nigeria, to be able to access or to do investments in Naira, increasing that demand for local African currency. So the benefits for Africa is immense when there is policy and regulation for crypto and for cryptocurrencies, allowing access to our local currencies, not only within the region, but also foreign, thus improving the economy and then improving the strength of our local currencies. I just wanted to chime in with that.
Thank you very much, Chime. Um, yeah, thank you. So, Faith, my question was you build strong networks across blockchain communities, and you are heavily invested in data and education initiatives. In your opinion, how important is user education for the adoption of stablecoins in both the corporate world and in the SME world?
Well, thank you very much for that question. Yeah, and this actually hits at the heart of everything I've learned, building community across blockchain ecosystem. And from my understanding, education isn't just important, but I see it as the primary adoption bottleneck, in our ecosystem, and even as regards to blockchain, crypto, and all of that. So, and here is what I have observed. And there have been conversations with, numerous companies, even at their CTOs level, understanding the technology, and the likes of their CFOs understanding the cost benefits. But however, the operational team who implements these solutions often lack foundational knowledge to feel confidence most of the time. And that confidence gap kills adoption faster than any regulatory uncertainty from what I have seen. Therefore, we need to target education, strategies. And through my work with various blockchain communities, I've actually witnessed companies delay stablecoins implementations for months, and not because of technical barriers, essentially because their treasury teams needed to understand compliance, not just compliance alone, but workflows, audit requirements, and the risk management protocols. So for context, there was this Fortune 500 company that I actually came in contact with, and I was told that they spent 6 months just on internal education before their first pilot transaction. And we can actually attest to that fact, even when it comes to, the regulatory jurisdiction where, for long, countries like Nigeria has been clamoring for regulations, and we see most of our regulators, lifting ban. And I can tell, and you guys can also attest and agree with me that most of that also came from a place of not really understanding how the technology works. And so therefore, education needed to happen, and we saw most of them getting enrolled in blockchain, crypto classes, courses, some of them acquiring, degrees. So they can be able to understand the innovation and, regulate appropriately. So effective education, right, from my understanding must be role specific and outcome focused. So again, in platforms that leverages stablecoins, OTC, and even in SMEs and different enterprises, their treasury teams need to understand compliance framework. Operations team needs to, understand workflow integrations guide, and even the leadership, they need strategic impact metrics. However, and also in a way such that SMEs would really understand it, they really need to, however.
Yes, I think Faith just needs a bit of a time, ask for a bit of a timeout. So maybe you can just proceed and we'll come back to Faith.
Okay, Faith, you're back.
Sorry for that brief transmission. Sorry, I'm so sorry
Okay.
about. Yeah, so as I was saying, like, for us to have this effective education, driven across SMEs and different organizations, we really need to, provide some one-size-fits-all crypto education, that will really drive enterprise adoption. And so we need also a customized learning path for different stakeholders. And for me at Surdatics, we have actually learned that trust, understanding is the foundation of any technology adoption. So when people understand not just what, but why, and how safely, essentially they become champions rather than, resistors, to learning. And therefore, education becomes a competitive advantage, right? So I always tell executives, and I think that this is really very important, that their biggest competitive advantage isn't just the technology. So it's about having a team that truly understand how to leverage strategically and, different models of learning the innovation. So conclusively, education really drives adoption, and adoption also drives success when being leveraged by SMEs and different business, platforms, and even at the governance level. So these are my views. And I hope maybe my other panelists or co-panelists can also contribute to this. Thank you.
I don't think anyone wants to contribute because I don't think anyone wants to contribute. So, Chime, I was asking a question. So, Quidax is rapidly deploying API-driven OTC solutions. How are you balancing quick integration with safeguards around anti-money laundering, know your customers, and foreign exchange controls so that you can build trust?
Okay. And I'll just try to hit the nail on the head, especially around you mentioned AML, KYC, security, and FX controls. Um, so because we understand API integrations and OTC transactions that happen over API will happen lightning speed in terms of pricing, in terms of settlements. And then we need to understand that there is the exposure of counterparty risk or third party risk. And what we ensure is that before access is granted to these APIs, there is a proper due diligence process that is done by both sides. So proper due diligence, and then each party already has done their internal risk assessment. And based on that, we now carry out due diligence. So ensuring that on both sides, everyone meets the required KYB that is needed on both sides, in the sense that you want to be sure that do they have politically exposed persons? If that, what are their anti-money laundering policies? What are their anti-terrorist financial financing policies? Who are the people behind the businesses? Ensuring that level of checks is done. KYC, ML, KYC and AML checks done at due diligence level. And then in terms of adherence to the FX controls, what we do is, as a regulated entity, ensure that even the use of stablecoins comply with the regulator and then with local FX policies. So ensuring preventing abuse, ensuring that whatever transactions comply with the regulator. In terms of security, we've ensured that systems, people, and processes are secure. So that gives like a well-rounded approach towards and ensuring security. And then what we've also done is allowing you visibility into some of these trades. And because especially we know that OTC desks that are not automated have the limitation of humans, meaning that we as humans have our limitations. You have to go to bed at some point, you're not machines. But with APIs, you can trade 24/7. Now, what happens is that when the people behind these systems get up, they want to see what sort of transactions were done, get full analysis at what rate was it executed, when was it settled. So we're giving that ability to do proper audit trails, in addition to all the enterprise grade security we've put behind our APIs.
Okay, thank you very much, Jimmy, for that very short and precise answer. So for Ezichim, my question to you is, or before we have, I'm just told that we have just like 5 minutes left before we move to Q&A. So for the audience, there is a poll on the screen. We would like for you to fill the poll before we end our before we end the panel session. So please fill the poll on the screen and let us know what interesting answers you've learned so far. So I'm going to address everyone directly. So what do you think? Where do you see the OTC and stablecoin market in Africa? Where do you see it headed in the next 3 to 5 years? And what do you think needs to happen to unlock the next phase of growth? So we'll go from Chime, Ezichim, Faith, then Obinna.
Mukta, please, can you take the question again?
So my question is, where do you think, where do you see the OTC and stablecoin market in Africa in the next 3 to 5 years? And what do you think needs to happen to unlock this phase of growth, like the next 3 to 5 years? What do you think is going to happen in the next 3 to 5 years for Africa in the OTC and stablecoin market? And what do you think needs to happen for that growth to happen?
Okay.
Do you understand the
Yes,
question now?
very clear, very clear. Yes. I'll go first. So in the next 3 to 5 years, in terms of OTC transactions, in Africa, I see way more maturity. And we are at the inflection point of adoption and regulation, meaning that we are at that point, that intersection point where adoption is gradually meeting regulation. What happens is, and what we've seen historically, is that when you have these two come together, you now start seeing maturity. You start seeing more mature systems. We started talking about APIs already. We are starting talking about proper system setup in KYC, AML, due diligence. So we'll see more maturity in OTC desk, and then that means that we've started seeing institutional adoption is going to expand from institutional adoption to government adoption. We've seen what's happening in the US, leading the pace with the Genius Act. We're gradually going to see that even with regulation, at least we have one stablecoin being regulated in the regulatory sandbox in Nigeria. We're going to see more government participation in OTC transactions using stablecoins. That's one thing I see going to happen in the next 3 to 5 years in terms of OTC and stablecoin in Africa. And on the next question on what I think will need to happen to unlock the next phase of growth, ties into the first response, is in the next 3 to 5 years, that's government participation now moving from where it was sort of a rejection, where you see being banned in the use, to now negotiating and regulating this space. Government presence is going to be more, and that's what's going to unlock the next phase of growth. Once there's clear government acceptance, and then we see more use cases. We saw mention of in areas of logistics. We've seen mention in import-export. We've seen the retail use case whereby you have tech and even non-tech workers getting in payments as a form of foreign direct investment, or a sort of inflows into the country in receiving their salaries, receiving payments. Those are the kind of things we're going to see more in the next 3 to 5 years.
Okay, thank you, Chime. What about you, Faith? What do you think is going to happen in the next 2 to 5 years in African OTC and stablecoin markets? And what do you think needs to happen before these growth can, happen? Like, I'm saying happen twice.
All right, just to add, for me, in the next 2 to 5 years, I actually see OTC in a situation whereby, particularly the trading situation whereby it's not just going to be bigger, but it will be a fundamentally transformed into the backbone of the institutional digital assets infrastructures, right? So we've seen current data that shows institutional involvement, and this has actually moved beyond exploration. And we have also seen that I think about 42% now incorporate digital assets into daily operation and OTC volumes, and that has actually doubled in 2024. So we are going to be seeing more of 24/7 liquidity provisioning for corporate treasuries, even cross-chain settlement infrastructures, connecting traditional finance with DeFi. Of course, we are already seeing the CNG impacts, and most of us will experience how beneficial it is. And we're also going to see more regulatory compliance, custody, and we'll see more OTC decks. I think now that we have more regulatory clarity, there's going to be more OTC decks, and African OTC Hub as a global financial center that we are going to also experience. And, more institutional adoption will skyrocket in Africa and in Nigeria. And, more so, there is going to be more local expertise, people having to dive deep into understanding of how the emerging markets works, the dynamics, and how they can also integrate more advanced OTC tools to really help seamless transactions. So there's going to be lots of integrations within the Web 2 and Web 3. You know, they are going to meet at a convergence that will really, make a lot of, create a lot of opportunities, and it's going to also create a lot of jobs, opportunities for a lot of people. So we see more developers learning how to develop these infrastructures and learn how to offer the OTC debts and its features as a service, to, overall make citizens gain financial inclusion. So that is where I see OTC in the next 2 to 5 years.
Thank you. Obinna, what about you? Where do you see the growth of OTC and stablecoin in the next 5 years in Africa? And what do you think needs to happen?
Yeah, for me, I see increased adoption, and I see more intra-African trade settlements, things like aligning with the Pan-African currency marketplace, to grow regional and continental dependence, outside of the USD and other foreign gateway payment systems. I see more integration of the traditional financial sector and also fintechs. I see more clear definition of stablecoin issuance and guidelines for stablecoin issuance. I see the development of stablecoins that is going to be pegged to African currency or resources, like gold, oil, and backed by these resources. Now that is going to increase the rails and the payments capacity using OTC. We need more of intra-African trade settlement, because right now there is very little intra-African trade happening. And we are talking about a market that is over, $20 billion. That is not something to overlook. So I see all of these things happening, starting from clear regulatory guideline, classification of stablecoins as payment tools and instruments, and opening up more rails, more accessibility, and integration of other sectors into the stablecoin market. This will grow the OTC services. And then, of course, there will be an improvement in the infrastructures powering most of these OTC desks. Increased participation across board. This is going to, increase more in the next 3 to 5 years. I mean, we've seen what has happened in the last 2 to 3 years.
Obinna, can you? Hello? Hello?
Yeah, I can hear you.
Well, we're struggling to hear you. Like your volume is a bit low. Can you raise your voice a little bit? Because it's like a low murmur.
Okay, can you hear me better now?
Yes, it's better now. So before it was like a low murmur, we weren't really hearing you.
Oh, okay. Sorry about that. So, like I said earlier, that we are going to see more adoption of, stablecoin payments and infrastructures across board, especially in Africa. It's going to also give an increase to inter-Africa trade payments and settlements, aligning with systems like the Pan-African currency marketplace, to increase the availability and accessibility of stable coins and settle payments within the continent, and reduce dependence on currencies like the USD, and also a clear definition, classification, and guidelines for stablecoins issuance is also going to help. This will help increase the rails, the players, and the participators. So all of these things are going to give rise to OTC payments and services in Africa. We can see what has happened within the past 2-3 years. Now imagine what that could be. We are losing a market in only intra-African trade that is worth over $20 billion. So that is one market that can be captured, pegging our via local issued stable coins to African currencies and resources is also one of those things that I see would happen within the next 3 to 5 years. Yeah.
Okay, thank you. So for the last person we haven't heard from, Ezichim, what's your answer to the question?
Yeah, so my colleagues have covered most of it. But just to add to that, I think chief of what I want to see in next 3 to 5 years is institutional adoption, right? So across traditional financial institutions, banks, hedge funds, asset managers, right? Because they have distribution, right? So I think that's very key for us for mass adoption, right? We need institutions, traditional institutions, to integrate stable coins and crypto, right? That would really accelerate adoption. And that thing I would say that would push that is regulatory clarity, right? So because traditional financial institutions are conservative by nature, so without regulation, they won't be able to move. So I think that's the key catalyst to making sure we.
Hello, we stopped hearing you for a bit, Ezichim.
Hello, can you hear me?
We stopped hearing you for a bit. You just came back.
Okay, I don't know the point which is stopped. But just to recap, it's institutional adoption and then regulatory clarity.
Okay, thank you. So I think now we're at the Q and
Okay, hi everyone. Please confirm you can hear me. I think Muktar's network kicked him out. Please confirm you can hear me.
I hear you.
Okay, all right. So we are going to move to Q&A. Hi everyone, we're a bit over time, so please give us a few more minutes and then for us to round up. But yeah, we're just going to take just 3 questions in the Q&A box. All right, so someone, Moyo Sorelu, had asked in the Q&A, can you elaborate a bit more on how the adoption helps local currency in Nigeria? The market uses USDC and or USDT, which are backed by the dollar. Who wants to answer that? I
Yes, I can
face.
take that. I can take that.
Oh, okay, all right.
I can take that.
All right.
Yes. So, and I'll just go straight to the basics of the local currency. There are 2 things that help the local currency, either and against any, and usually you talk about it in pairs. So she mentioned USDT, and I believe it's against the dollar. So 2 things. And we all know that it's all driven by demand and supply. So it's either you're increasing the demand for Naira or you're increasing the supply of the other currency. Now, businesses that want to access payments today, international payments, cross-border payments, like Obinna had mentioned, find it difficult to do so because they need access to either some form of FX account. Now, using USD or USDT, that increases the amount of inflow of dollar, meaning that you increase the supply, thus strengthening the local currency. That's just one very short, easy way to explain how that increase or that the exposure to stable coins helps to boost the local currency. Guess what? We are talking about small retail business. Now, we are talking about what of large institutions that want to raise funds. They can get inflows, foreign inflows in terms of foreign direct investments using stable coins easily. And that's how the local currency gets boosted.
All right. Thank you so much for your.
Just to add, can you hear me?
Okay. Yes, you can.
Okay, so just to add to what my colleague had said, the adoption of stable coins really is going to kind of provide some kind of relief pressure that is on the forest. Think of it this way, like when businesses use stable coins for international trade settlement, they will reduce demand for pressure on official forest channels, right? So this will allow the naira to stabilize naturally rather than being, strained by artificial scarcity, right? And I also want to say that somehow it's also going to create some kind of infrastructure investment whereby digital asset ecosystems, would now have the opportunity to create more jobs, and it will attract international businesses, just like my colleague said, to set up operations here. And again, position Nigeria as a regional financial hub, more economic activities, of course, it means stronger naira fundamentals, right? So again, it is very important to also iterate that stablecoins do not really compete with the naira, right? I just want to bring that, and we should understand that they complement it by making Nigerian businesses more competitive, not just locally but globally, which really ultimately strengthens our entire economy. So these are actually, the benefit is going to cause to even our naira and even in the job ecosystem or employment ecosystem. So I hope I've been able to answer or contribute to that question. Thank you.
Yeah, thank you so much, Faith, for your response. That's actually really insightful, and also for also emphasizing the fact that the naira, our local currency, and also stable coins are meant to work together. I think that's also like general idea of what we were trying to pass through this event, and also through the report, the newly launched report. So I see that we have some questions for the Quidax team. Hi, Ezichim and Chime. There are some questions in the Q&A box, so you're able to just type answer, so that we focus on the other questions. So just type answer. I think Philip, Calciso, and some other questions about Quidax. So if you're able to answer that directly in the chat or in the Q&A box, that would be good. So to the next question. But before I move to the next question, I see Muktar is here. And Muktar, are you back?
Yeah, I'm back.
Okay, all right. I'm just going to hand over to you to continue the. Okay, so I'm just going to read out two more questions. Like I said, we were taking three questions in total, and then I'll hand over to you to close the event. Is that fine, Muktar?
Sure. Yeah, it's fine.
Okay, all right. So, someone is asking. So, an anonymous attendee has asked, are there risks associated with over-the-counter trading, right? And are there regulations for it? Also, the person is asking, as a business, how do you handle the volatility of OTC customers? And then another question. I'm trying to join all the questions of this attendee in one because they are very related. And also, this person is asking, won't OTC be a major driver for money laundering, as there's little KYC being done for OTC customers due to customer acquisition? Yeah, so risks associated, and how we're thinking around it, especially in terms of regulation, also handling volatility of OTC customers, because customers end up using the best rates. And also, won't OTC be a driver for money laundering because of the little KYC? Who wants to answer this? Okay, I think Ezichim has not spoken. Ezichim and Obinna. Okay, I see Chime's and okay, Chime. Please,
Can you hear me?
over to you.
Are you there?
Yes, we can. Yes, yes.
Okay, I'll take one question and then Chime, I'll hand over for the other one. So let me answer the one on money laundering. So Quidax is regulated by SEC, and we adhere to very strict compliance standards, right? So we, for every client that we onboard or we trade with, we always collect full KYC. And periodically, we're also reviewing the client's KYC, right? So we make sure that all funds pass through us and out of us are always checked and always compliant, right? So you can be rest assured that there's no dirty funds passing through us, and no institution can use us for money laundering.
All right. Thank you very much for that. Chime.
Yes, I would have loved Ezichim to actually take the one around how OTCs handle the volatility. Yes, I think there was a question. I think Ezichim would have been in the best position to speak on that. But around risk, I think Ezichim had answered, and the risk associated with OTC transactions. Ezichim did a fantastic job in explaining around the money laundering part. And for the risk associated with OTC, I just have one very simple answer. Use a regulated OTC desk. It's very easy to, there are a lot of OTC desks out there. But when you use a regulated OTC desk, you have an OTC desk like Quidax that has followed the guidelines that have been set by the regulators. And this it's very easy to say, oh, the regulators, but the regulators have followed, they have years of worth of experience from most different financial institutions across different countries, looking at their different frameworks. And so an entity or a business that has set or that is following this regulation or this framework set by the regulator is way less likely to is way or more likely to ensure that you follow the framework that ensures that you keep the risk to the bottom or have taken like necessary controls to keep risk to the lowest. So the short answer to risk is use a regulated virtual asset service provider when to manage the risk for OTC deck transactions.
I wanted to add something, right? Particularly with respect to the money laundering aspect, because most people feel that despite they are, dealing with an OTC desk, and again, that transactions on the blockchain are anonymous, and so therefore they are being encouraged to, launder money and all of that. I just wanted to say that, of course, as much as an OTC desk can really be regulated, right? We should really understand that any financial system can be misused, okay? But here is what the data actually shows: one, that there are blockchain transactions, and these transactions are more traceable than cash or any traditional banking system. So every transaction is permanently recorded and can be analyzed forensically, because right now we have blockchain forensic tools that, no matter how you try to mix and unmix those transactions, those blockchain forensic tools can unmix those transactions that are already recorded, right? So if you think that an OTC DEX, maybe the likes of Quidax that has been regulated or that have been licensed or given provisional license, and all of that, that's because these guys are being supported by the regulators, and again, the transactions are anonymous, you can really, use them, and for any illicit money transfer. I just want to call us to reminder to know that these transactions are traceable. They can find it. And as for OTC DEX, this is where they have to be also very, very careful by doing their due diligence, making sure that they provide a robust KYC, such that in case of any abnormalities, they really can track those illicit transactions through those KYC, right? So And I know that there has been this misconception about criminal organizations, because they prefer, they can hide in most of this money, but blockchain transparency really makes it a poor choice for sophisticated money laundering. So everybody, you really have to be careful that as much as, yes, these guys are regulated and transactions are anonymous on chain, it is not a very good choice if you have such illicit, mindset. And please, as a people, as a community, as an ecosystem, let's try to do away from such mindset and such transactions so we don't get into trouble. We have seen what has happened in the past where most of, our community members, prior to the time when there has not been regulations, people do OTC transactions, P2P transactions, and without doing any formal due diligence. You have, politically maybe disposed people or exposed people engaging in these transactions. But over the time, of course, regulators, regulators and their legal powers are actually caught up around them. And you can attest that most of them left the country. They fled the country as a result of all these transactions, as a result of, negligence in putting proper KYC, processes in place. So we don't want to experience such again in the country and even in Africa, and we don't want to be tagged as people who really depend on, regulated OTC DEX or payment institutions to launder money. So please, let's use this ecosystem rightly and wisely for all. Thank you.
All right, thank you so much, Faith. Think that is really useful. Our last question quickly would be a question from Leslie, who is asking how and when can tokenized assets like real estate or commodities be adopted alongside stablecoins in Africa to enhance trade and financial inclusion? Any takers?
Yeah, I think first, say for example, you are running a real estate platform. So yeah, I would take from from my platform, like Surdatics, where we provide access to quality data via researches, and people get to contribute to those researches and they get incentivized, right? And here we have our platform native token that can be used to reward people, right? But however, if, for example, we have like a real estate platform, and this person, probably you do not want to get yourself into the hurdles of tokenomics and all of that, you really can integrate stable coins into your platform, where you can use it as a bridge of settlement between our fiat currency, and I mean normal traditional fiat currency, and a programmable currency, which is the likes of a CNGN, all right, for settlements, payments. And therefore, for someone who is trying to buy maybe a particular housing unit, probably you are in diaspora, you really can easily get this unit of housing or property on that platform. And I think to point you to a platform that does that here in Nigeria, we have the likes of Sitemap by House Africa. I think they are actually doing that. They've digitized the real estate sector, and they have also integrated blockchain features and stable coins features that really can facilitate payment transactions on their platform. So I think you really can check them out and see how they are doing that practically, because there's nothing I'll tell you here that really may make sense, but I need you to have that experience with them so you can have a deeper understanding on how that works. And I hope I have been able to, contribute to that question.
All right, I see that Chime's hand is up.
Yes,
Yeah.
yes. I just wanted to chime in. And like Faith mentioned, there are a number of practical approaches. So the demand is not yet as much as stablecoin, but there is rising demand in real world assets, tokenization of real world assets today in Nigeria. We recently had a program where we were discussing, it was a roundtable where Quidax brought in the regulators and brought in other entities, what we call traditional finance, so asset management, trustees, wealth management firms together to have this roundtable. And there was a very big example, who the representative from the Securities and Exchange Commission gave about housing in Delta states that was being tokenized. And this is where what the flow looks like. You have the real estate or the developer, you have the digital asset custodian, and we have the only licensed and regulated digital asset custodian, Block Vault, which Quidax can really do an intro if you're interested. Block Vault can work in doing that tokenization. You have the developer that owns the real estate company, has the relevant documents. You have the digital asset custodian that does the tokenization. Then you have the digital asset exchange, which is Quidax, that allows or makes it easy to buy into those tokenized assets. And then for the people or for our asset managers or trustees or participants that work with trustees, you need a trustee to trustee these digital assets to ensure that they are available and then that the developer doesn't go with it. So there is already an existing flow, and then we are happy to work with anyone that is interested in an opportunity in reward as in digitalization rewards as assets. Ezichim, over to you.
Yeah, thank you, Chime. There was a question about slippage, right? So how do we hold rates on the OTC desk? So that's the fundamental benefit of trading on the OTC desk, right? So when we negotiate and agree on a rate, we hold that rate for a particular period of time. And regardless of how the markets move, if the rate goes up or down, we'll still maintain that rate from you and shield you against market volatility, right? Until the trade is executed. So you always rest assured that any single rate you get from us will be locked despite market movement. I hope that answers the question.
All right, thank you, Ezichim. Hi, Faith. I don't know if this was the.
Okay, I just want I saw a question that speaks around off ramp and on ramp, because I as a builder I'm also interested in knowing. I think the question was about if there are API documentation for integration into different platforms, because for me I really would want to have such kind of integration with Quidax. So please, I'm interested in that question. And if I don't know if you have such documentations on how platforms or startups, like Surdatics can easily integrate your features, right? Your on-ramp, off-ramp features into our platform for seamless user transactions or payments, products, payment transactions for our users. So I would like Quidax to please answer to that question. It's very important because I know there are a lot of builders who are looking for on-ramp, off-ramp payment APIs.
Yes, I'll just drop the link to our APIs. And we have APIs that allow you to do off-ramp, on-ramps. And I'll be dropping it in the comment section. Very easy APIs that developers can easily get started with integrating our API. So very straightforward. The APIs explain to you how to get started, explain different concepts that allow you to whichever flow you're interested in. Are you interested in on-ramp flow? It walks you through different steps in how getting in the fiat currency, doing the conversions, fetching the rates, and then paying out the crypto into your wallet. if you're interested in the off-ramp flow, which involves you generating wallets and converting your crypto to Naira and then paying it into your bank account. And then we also have widgets. For those that would want to integrate an API and prefer a widget, we also have that. Our documentation covers multiple scenarios, and we'll be open to discussing with anyone that is interested in using the APIs.
All right, thank you so much for that. And yeah, we've come to the end of this discussion. Thanks to our speakers for their useful and very brilliant perspectives and insights into this discussion. Thanks to everyone, our attendees, for staying with us this far. We hope that you found this event as insightful, as useful, and as useful as we have found it. Please let's not forget to download the report. The link is in the chat box. Let me drop the link again for us to download it. Also, let's not forget that this event was brought to you by TechCabal Insights in partnership with Quidax. Also, thank you to our sponsor once again, Quidax. And if we don't have any other thing else, okay, yeah. So if you don't have any other thing else, thanks to everyone again for joining. We hope that you have a great rest of the day and rest of the week ahead. Bye, everyone, and thanks once again.